What's going on, ladies and gentlemen? Welcome back to another video. So what we're going to be doing here month to month is taking a look at the SPY or the S&P 500 chart, taking a look at the technical setups that we're kind of running into to give you guys an idea as far as where we might stand in the market and some things that we could expect to happen if the price action of the S&P moves to some of these desired locations. So let's go ahead and start sharing the screen and get into it. Again, we're going to take a look at this chart here. We're going to go through a couple different time frames, show you guys really what we're looking at. In this video, you're going to learn, various trend drawing or drawing some trend lines and looking at some support, looking at some resistance, and kind of giving you an understanding as far as what will and what probably is going to happen as price moves into some of these desired spots within this chart. And after doing this for a couple months and you guys tuning into every single one of these videos for a couple months, you'll start to get a really good idea as far as how to draw trend lines, understanding how resistance works in specific spots, going over multiple time frames. So with no further ado, let's get into it. And something I always like to do is start with just a 20-year chart. Not that you have to do this, but when I'm analyzing stuff, I really like to go on just a large time frame, kind of see what has happened in the past and where we're at currently. So back down here in this big drop, you will see this was back in, of course, 2007-08, and you can see where we're at now. Big jump. Now, something interesting just to take note on the chart is kind of look at what was happening here before 2007, and then kind of look at what happened here back in 2015 when we had a little scare. But now look at what's happening right here where we're at. Okay, so you can very well tell that back in 07, even in 16-15 here, and then back to where we're at currently, we're starting to see some very aggressive back and forth trading in the market, which obviously points to a little bit of uncertainty. It's not like we're just in solid trend mode. We're not in a solid trend. We're really grinding and fighting the trend now. So just something to take note, right? So looking at this chart now, what we're on is a weekly time frame. So I took the liberty, and maybe I'll redo them in real time so you guys can see it here. So I've taken the liberty just to draw some trend lines here, okay? So if we go from this low point here in 2015, we can very well argue that the S&P was on a pretty solid trend, right? If we draw a trend kind of matching some of these dips and low points and come out to a median average of all of those dips, you're going to see what happens here shortly. All right, so we can see that we dipped here 2015. We kind of came down to the trend there, tested, bounce, tested, bounce. We came down to it there, tested, bounce, kind of bounced again here. This was the beginning of 2018. All right, and then you can see here when we had our big drop down in December, you'll notice something interesting happens where we were bouncing the trend. All right, we kept bouncing off the trend, and then once we finally broke, and let me clean up these drawings, zoom in a little bit. Once we had actually broken through the trend, you'll notice something interesting. We come down, we bounce, and then we start to reject the trend. So this may not be something that many of you guys pay attention to or even know, but if you have a stock that's trending and following some sort of trend, when it breaks that trend, a lot of times you'll see it come down below, back up, and test that trend. And if it doesn't want to break back over, a lot of times it'll fail and we'll start kind of a new downward trend, just like you kind of seen here. We came down, we tested that, and then we went for a downward move. And even still, if we extend this trend line to the right, you can see that it's not quite touching, and that's possibly because I've drawn it a little off, but you'll see that it's still rejecting that trend now. Now that we've broken below, we're still rejecting that trend to the upside. So though we're still moving up right now, we are essentially not going through the resistance of that upward trend. So this upward trend has now become a resistance upward trend. That's just one, right? So what we do know now is in the beginning of 2018, we had our first initial scare in the market. That's when things really started to get shaky and a lot of talks of recession started to come up. And that's especially when I started to get a little bit nervous of the overall market because, again, you normally don't get really big drastic swings like this unless something's happening underneath the surface or there is a legitimate reason where we might want to be scared. So at that current moment in time, that's why I started to get a little nervous, more nervous of the market, shall I say. All right, so something important to note out is you can map this out as the first kind of scare, right? That was our first scare in the market in quite a while, okay? And then this one here would be kind of the second scare. And now we're arguably into the third kind of downward or scary move. And so what I wanted to point out is, if we take a look at this chart, we can draw a resistance, and you'll come to find that the market is just barely green from our first initial scare. If we take a look at this, we should be, let's see where we're at. So the market's really, it's only up about arguably 1-2% from our first initial scare in the beginning of 2018. So if you think about it, from the first initial scare in 2018 to where we're currently at, the market's really almost made zero gain in terms of that time frame. There's been opportunities to make a win or a gain throughout the whole time. Of course, if you bought down the low here and sold the high, that's a 29% gain. But again, from the initial scare to where we're currently at, we're only up about 2%, arguably 1%, area. So we haven't really made much gain in theory from the first scare of 2018. So that's one trend line. Now I want to talk to you guys about another trend line. All right, so that's more of like a longer term trend. Now what we want to take a look at is some of these shorter term trends, right? So remember how we had this long term trend we broke and then we rejected here? Look what's currently happening. We have this low point where we can go draw a trend from this dip and through, and you'll see that we're not yet fully rejecting this trend line, but we sort of have started because we've broken it. We've come up, kind of tested, rejected, tested, rejected. So we're kind of still rejecting this new trend, right? But more importantly, the reason the price action is starting to fail here is because if we do a simple resistance line, you'll see that this is, makes sense, right? Look at the big down drop here in the beginning or closer to the end of 2018, goes straight across. You'll see that it topped here. We came up, we topped there again, pulled back. We broke out briefly from that resistance. We came back under, and now we're rejecting right on that level. So we have one break of a new trend line. And now we're starting to reject, and kind of resist that 295 price action level. So there's a couple concerning things, and one of which is this. Excuse me, let me redo this. We also have a rising wedge or an upward wedge. And if you're not familiar, an upward wedge can be a very bearish pattern, right? So as price action, and let me draw it on the screen with my drawing tool. So as price action kind of grinds up, you can go into what's called an upward wedge where the price action, let me kind of do this, where the price action is coming into a wedge. And if it breaks out of the wedge to the downside, that can lead towards usually a negative move. And it's the same thing on the downward side. If we have a stock going down like this, and it goes into a downward wedge, and then the price action breaks up and out over that, then we can get a big, nice push to the upside. So there's simultaneous patterns both up and down, exact same mirroring images. Right now what we have is a rising wedge in the market from this point here going forward, and even arguably the point all the way back here, this trend, right, going through. We kind of have a rising wedge matched up with a lot of resistance. So right now we're still on a weekly time frame. And if you look here, we have that, again, like about a four weeks here, 1, 2, 3, 4 weekly resistance at about 294, 295. So in the shorter term perspective, right, well, more like the longer term, I guess you could say. So long term, short term, whatever you want to call it, I'm looking out a couple weeks, couple months. So here's really two scenarios or a couple scenarios you can look at. So what's going on right now, if we zoom in maybe on a daily chart here, if you zoom in, you can see we're rejecting, right? We definitely have clear resistance right here around this 294, 295. Okay, so far we've been trying to kind of hold and continue higher, yet we've failed for a couple weeks now. We cannot get over this 294. So this automatically tells you that if price action can successfully get over this 294, 295, then at that point we will most likely see, a nice solid green week over this level, right? Because again, that's resistance. So what's happening at this resistance point is people are selling, or people are even taking short positions around 294, 295. And if the bulls are strong enough to get us back over that level, then we can run into a new breakout and a new short squeeze that will probably take us back up close to the 302 or the 52-week high up here, where we'll see some short-term resistance, and again, we'll pull back, right? If that were to happen, we can run into sort of a cup and handle formation, right? If we run up to the 302 highs, right, and we pull back, then we can see a cup and handle that might take us into new highs, all right? That's one scenario that we're looking at. Another one would be to the downside. You can see we've slightly been kind of trending up here. Each week, the bulls are able to get us into a higher trend, okay? Which seems good, right? It does seem somewhat promising to see that small little trend, okay? So we do have a slight little mini uptrend going on here. But what happens if the bulls cannot get over this 294 level and we continue to do this? That would lead us, and if we cannot break and we get through this downward trend or upward trend, we can lean into a nice sell-off that might take us right back down to these lows. And if we break these lows, you can bet that we're going right down to the low point here of 274. So again, there's quite a few scenarios we can see play out, but nonetheless, the market is starting to give us more bearish signals than, of course, we're looking, than of course, bullish signals for the time being. So there's a lot of different things we could touch here and keep going over, but nonetheless, really the consensus here is the market for me is bearish until we can get back over the 294, 295. We're kind of in a rising wedge. The market so far doesn't really like these new 52-week highs. Every time we press into a new 52-week high, we continuously get sold off. Now, we can also argue that, the tariff news and the trade war with China is weighing in on the market. We have we're having global economic slowdowns, right? A lot of the economies around the world outside of the United States are starting to slow down. And now don't think that just because the United States economy is somewhat still strong, that it can't become weaker just as all the other global economies. Remember that most oftentimes, if there's a global slowdown, a lot of times the United States' economy will be the last one to fall. Normally we stay the strongest and then everything kind of weighs in and then we take a turn to the downside too. So just note that that's very well possible that can happen. Something to note is that the Federal Reserve, if you're up to date or know anything about the Federal Reserve, they're looking at doing, more interest rate cuts. Now, generally, there's a lot of ways you could look at this, but long story short, it's not really seen as a good thing right now that the Federal Reserve is considering cutting rates. If we had a very strong economy, as many economists say, and as, again, the media is telling the average citizen, if the economy really was that strong and we're not starting to see some type of slowing down effect, then, again, there really shouldn't be a need to totally cut interest rates. Now, again, don't think that interest rates are just meant to prop up the market and prop up the economy. Again, the Federal Reserve weighs in a lot of economic conditions and supposedly do what they feel is best for the overall economy, right? That's basically it, not necessarily the stock market. But the funny part is we have Trump weighing in on the Federal Reserve, and the Federal Reserve seems to be getting pressured into some of these rate cuts, which isn't a good thing. And secondly, there was a news piece that came out just a couple weeks ago in which the Federal Reserve said that they will do everything in their power, so to speak, to keep this expansion going, which basically just tells you that the Federal Reserve is willing to really manipulate or do what they can within their power to keep the bull market going. Again, that sounds like the bull market's coming to an end, but they're still going to try and do everything that they can to keep it going because, of course, you'd never want to fall into recession or bad times. Yet, again, it's pretty much unavoidable. So right now, currently, there's a lot of talks of recessions. We even have the bond market and the yield curves inverting. So there's a lot of recession signals that are going on in the bond market. Every time we get these sort of recession signals within the bond market, they've been pretty accurate. Generally speaking, whenever we get the inversion curve or the curve in the yields that we have gotten, I won't go into too much detail on that right now, but as if, we've already seen it, right? So all these curves, we can kind of caught up. So the signals that we're getting in the bond market have been able to pretty much predict a recession on average every 12 to 18 months after they've occurred. So we started getting them a few weeks ago pretty aggressively, and generally speaking, about 12 to 18 months afterwards, a recession will, again, precede those signals. So we're definitely starting to see some bearish activity. Just want to come out, make a video, guys, give you an update on where we're currently standing in the S&P 500 with some technicals and with some new recent news in the market. And basically just point out the short-term indicators that we're looking at. The 294 is going to be a short squeeze kind of bullish move, and as long as we stay below that, I would remain bearish. This is more or less for traders, and if you're an investor just kind of looking for some extra information, well then, there you have it. So we'll come out, we'll do a new updated video for next month, right, or this month as we get closer to the end, and see where we stand, see how we're looking. Again, a lot of this won't change. Some of these technicals really won't change. The only thing that should change in the short term is really what's going on in this particular situation. This is where we're going to be focusing on next month, and then of course the months that follow until we get a really big move in the market. And of course at that point we could be moving into a downtrend. We could be doing various multiple different things at that point. So we'll be on standby. We'll see what happens. And then also I will note before we go, I know not to sound like the doomsday guy here, but if we were to break this low point right here, just note that there isn't truly any big significant support other than this breakdown level, which is about right there. So again, if we break this low, the new support area should be around here in that level. And again, once we're through that, if we do get through that, this is just a free move from up to down. So we probably would just see the market go pretty much down to these December lows. So don't think that the December lows isn't something that can happen. It's very well that we're going to see December lows at some point, right? But again, just note that this whole move up in the market was pretty much a nice run. Didn't create too many big structural areas, so we shouldn't have too much support going through as we break through that 275, 274 mark. You could just kind of go into somewhat of a free fall at that point. So want to give you guys an update, come out here and show you guys a couple things. So I hope you guys liked the video. Hope you learned something new. And as always, remember to subscribe to the channel so you don't miss out on when we release something new. And as always, guys, stay green, take care, and I'll see you guys on the next video.